the market goes green. And if the market goes green, the algos will kick off. And the algos kicked off. The algos kicked off. We got all the way up to 97s. And it just smashed into that exit price. Remember we shouted the exit at minus 500? We said the dealers have got long 500 here. They've managed to get rid of the 400 here. We said they've now managed to get rid of the 500 here. That's your exit. What I said to you guys was it won't go any higher than that, at least for the time being. And it never went a single tick higher than that phase. Never went a single tick higher than that phase. And ultimately what happened, it doesn't mean it won't go higher. It means it won't go higher at that point. What it means is that it might still go higher, but we have to watch the value. And if the value goes bearish, we know it's probably going to go lower. It's pretty simple. Now, the dealers never managed to get short. That's okay. We don't have to have the dealers on every single trade. What we do have is when the dealers have a position, we can recognize it. But the dealers never managed to get short in this one. So guess what? The dealers are actually going to have to withdraw the liquidity, aren't they? Because the dealers never managed to get short. So when the selling came in, the dealers couldn't sell their assets to them. You know, the dealers never managed to get short. So the dealers couldn't put bids into the market based on their short inventory. And because of that, the price has to move. You see the difference? You see the difference, guys? Because they don't have any inventory. So if any selling comes in, they've got to pull the price away from the selling. It means that there's a high probability that there's going to be a fast money reversal away from that top edge because the dealers didn't get short inventory. They've had to offset the selling by price pulls. And that just allows the price to sell off this area really aggressively, even when the value is not that good. And this one that goes higher because the value is very good. Even with the dealer selling on the upticks, it's still very, very good value. The value isn't very good, and yet we get all that selling coming in, and you've got to say to yourself, how did that happen? It's very obvious why it happened. The dealer wasn't short, so the dealer had to pull against sellers, and that's why we get outsized moves back down into obviously the commercial buy zone here, and you can see the dealers obviously taking on some of that trade. There's a little bit of an ice order there at 91.5, 92s, but obviously this might be a dealer buy level that might start forming again down here. Might be a dealer buy level. So I'll be watching this for retests, see how the value evolves, and possibly going in for a long trade on a retest down into the lows again in these little liquidity areas here, because that might be just the perfect trade for the US metals market opening. When we were talking about this gold this morning, it was quite a revelation perhaps for some people, because we were talking about this trade here at this point here. And at this point here this morning, the guys will tell you we were chatting about it at this point here. This is what we were seeing, right? The value looks really good. But what I said to everybody was, yeah, you know, we can obviously understand how much value is in this trade. I says, but and a lot of people were kind of questioning the fact that I had given a target price way over $1,000, way over $1,000 for this. And a lot of people were kind of questioning. Well, they weren't questioning. But the context, I said, is very important. And I says, there's a little bit of magic that I can show you next as to why I was so bullish this bottom edge against these, the short-term value change. Why was I bullish against the short-term value change? Because when we look at the Japanese yen, you might be questioning this. When we look at the Japanese yen, you're looking at this and saying, okay, I'm looking at a market that now looks very, very bearish here. So why are you buying up at the top edges? Why would you ever buy at the top edges? I think that's what the conversation was, wasn't it? Because I bought in here again and the Japanese yen was selling at that stage. Real yields had gone good, but the Japanese yen was selling and we were into this little balance here. I think that's what the conversation was, because we had dealer buyers here, and then dealer sellers came in here, with the short-term real yields coming off and the Japanese yen coming off. Into this area here, what am I looking at? Well, the reason why I was bullish, and as I said, there's a little bit of magic that comes from this. Just watch this, guys. This looks like a neutral, possibly even short-term bearish market against the yen. Watch what happens with this little bit of magic. Make a wish. Think really hard about the bulls, and the bulls will slowly appear. And look at what happens to the chart, guys. All of a sudden, from out of nowhere, the bulls appear on the screens. And you go to yourself, wait a second, what kind of magic is this? That where I thought it was possibly bearish neutral, I now see why you are very excited about gold off the bottom edges. Wow, that's kind of freaky. And all you had to do was wiggle your nose 3 times. All you had to do was wiggle your nose 3 times, and this appears, as if by magic, delivered by the trading fairies. And at the bottom, can you say trading fairies these days? Can you use the word fairies? I don't know, maybe that's off limits. But anyway, the trading fairies delivered this brilliant macro view of the marketplace. It's called the zoom in and out button. Unbelievable, isn't it? What a piece of kit. Comes free with most mouses. Literally comes free with most mouses. And yet it's one of the most valuable little pieces of kit you can ever have in your toolkit. So when you zoom back out, you're obviously now looking at this and saying, if I could get longs at the bottom edge, I would murder this. Well, that's what we did, guys. I murdered the long gold. I told the guys in the room this morning. And you're starting to look at this and saying, and you only made $1,000 target on this? This should be doing $2,000, right? Well, it should be if the value keeps going up. It should, what we said was it should at least be clearing this price here at 96s. And 96s, which are off the bottom line price here of 86s, 85s, was $1,000. So when we understand that, we start to zoom back into the markets and we start to look for the fine detail. And sure enough, we get all the way to that target price as if by some sort of voodoo magic, and we stick around. The market maker, the dealers clear their books, neutral, and then the sell-off happens, and then the buyings just came back in. Unfortunately, the buyers just were too aggressive there for my liking. But you know why they're aggressive? There is huge upside value to this trade, guys. Huge upside value to this trade. So the lean was there. I mean, you could have taken the trade at 92.2. You can see the lean on the sell side of the book there, giving you a very easy, clean, sharp buy trade at 92.2s. Took you up to 95s, $300 if you wanted it. Yeah, I think that's probably it, David. I think that could be at the core, is the inability for people to zoom in and out of their screens. It could well be at the core. And it's actually, it sounds like actually a bit of a joke point, David, but there's actually a seriousness to this, because I remember having a conversation with somebody, and it was a conversation in this room, and the point was, I can't understand why you're selling, or whatever the conversation was, because the short-term value was bullish. The short-term value had just turned, literally just turned, and the point was, I can't understand why you're a seller. And I took the zoom button, and I zoomed out, and literally the only trade you could take was a sell. And the power in that little piece of information suddenly became incredibly crystal clear. Context is everything in trading, isn't it? Every candle has context. Every candle has a delta. Every candle has something. But inside the world of a bigger story, and then inside the world of an even bigger story, context becomes really, really visible. Because a single context on a single candle is probably worth the duration of that candle. We've said before, if you're looking at the context of a 1 minute candle, it's probably got context for the next 4 or 5 minutes, yeah? If you're looking at the context for the last hour, it's probably got 4 or 5 hours of context. So when you're looking at context, it is usually 4 or 5 times the time frame that you're using as an analysis. So obviously, if I'm looking at a 1 minute chart, my context is the next 5 minutes. I've got to make sure that I realize that that's what my context is. But by zooming out, I take a bigger context. I don't have to change the timing on my chart, but my context to this buy trade is now several hours. which means this buy trade at 9 o'clock still has the possibility of being a trade for 4 or 5 hours perhaps. So I could be looking at this for the whole London session basically. And that's exactly what we did look at it from. We came from 9 o'clock till 1300 hours. It's a long time. And the reason why we were able to hold on to the buy trade for the vast majority of it was because we had a bigger time frame perspective of what the trade is doing. So it's actually a really, really important point. And I know we kind of shroud it in magical fairies and stuff, but my goodness, the ability to zoom in and out of value is incredibly powerful for people to actually just recognize that they should always be doing it. It shouldn't be something that they do every now and then. It should be something that they actually do all the time to get context. So when I look at that chart there, I want to zoom back in. I want to take a look at the short-term value at the top edge, and I want to get a read against that, knowing that I can't sell at bottom edges because the macro is bearish, the macro is bullish. So I want to make sure that if I'm going to sell it, I'm going to sell it on high upticking prices. It's incredibly important that we always remember to put the context back into our charts, guys, from different time frame narratives.